let me bring on board Mr. Atul Tantia, Executive Director and CFO at GPT Infra. Order win of around 200 odd crore. Construction in infrastructure continues and traction continues to build. They've got an order pipeline almost 4 times now than their FY24 revenue. Welcome on board, Mr. Tantia. Talk to us about execution. Where does execution go this year? And what does this order bring in terms of new order visibility? What's the kind of visibility you're seeing in terms of new orders going forward? And what should your FY25 top line look like?
Sure, thank you. So last year we did revenues of 1,000 odd crores. This year we expect to grow by about 25-28% for the full year. This order we are currently L1 in. We expect it to be awarded shortly. For this year, we have got almost 830 crores of new orders. With this contract coming through, we'll cross the 1,000 crore mark for the year. We expect full year to have order inflows of about 2,400 crores, which will allow us to maintain the order pipeline of almost 3.5x of our trailing 12-month revenues, which is a very healthy order book for the sector.
Okay, Mr. Tantia, you've also planned to raise roughly 175 crore via QIP. You've said that this will be used for working capital debt as well as long-term capital requirement. Give us some more details as to how these funds will be used, and going forward, what will be the use case of these funds be like?
Sure. So this QIP was already done last week. We already raised 175 crores last week. And that has been used to pare down almost 135 crores of debt, working capital debt, which deleverages our balance sheet to a large extent. Our gross debt on the balance sheet on March was about 190 crores. So it brings down the debt below 50 odd crores for the balance sheet at the balance sheet level currently, which will allow us to have a much lower finance cost for the full year. This will obviously lead to a higher PBT for the company as such. The balance money is being used for long-term working capital and general corporate purposes as per the shareholder resolution.
Mr. Tantia, with the QIP now concluded, you've raised 175 crore. What does this mean for our order pipeline capacity? Will we be able to bid for higher orders as in now? And again, now that the revenue growth guidance that you've stated is about 20 to 25%, what does it mean for our profitability and PAT levels going forward? Because with the finance cost coming down significantly, there would be a huge jump up in the profit numbers also that we're looking. So can you break these two questions down for us?
Sure. So with the QIP of 175 crores, it increases our net worth, which allows us to bid for much larger contracts. Currently, we are qualified to bid for 1,000 crores of contracts in our own name. This will allow us to have our bid capacity improving, and we can bid for contracts up to 1,300, 1,400 crores in our own name. We are already bidding. The largest order we have on our order book is about 830 crores from NHAI, which is a bridge over Ganga and Prayagraj. So the order pipeline obviously will improve given the QIP due to the improvement in the net worth. And obviously the working capital will also ease out. In terms of the profitability, at the EBITDA level, it will not lead to a major change. At PBT level, like I said, it will obviously improve the profitability. We expect the profitability to grow this year by almost 40-45% compared to a 25 to 28% revenue growth for the year.
In the order pipeline that you've mentioned that we are seeing huge opportunities coming in for, can you give us a number and what is the kind of order pipeline that we are looking at? And in particular, what will be the share of the large size orders? In last quarter, we clocked in a larger order from the RVNL side. So what is the kind of order inflow that we are looking for FY25 and even for the near-term scenario?
Sure. So we expect, we want to maintain order book, the unexecuted order book at almost 3.5x of our trailing 12-month revenues. For this year, we've already got 830 crores of new orders, and we are L1, like we announced last week, in a contract worth 204 crores with South Eastern Railway. So this year, we will have, we already have about 1,035 crores of new order inflows. For the full year, our target is to have an order inflow of almost 2,400 crores. We are seeing a lot of government tenders in this sector, and we are quite confident of meeting our targets. So with this, we should have a closing order book at the end of March of almost 4,000 crores plus, which will be our single largest closing order book in our history.
Understand capital allocation, Mr. Tantia. If I can just break this down, you've said that the profit after tax number will see almost a 40 to 45% growth versus last year. You've raised some 170 odd crores in terms of capital. What are you repaying in terms of debt, and where are you utilizing some of these proceeds? And just as a linkage, what's the margin outlook like for FY25?
Sure. So this 175 crores, like I said earlier, has been out of that 135 crores has been used to repay the debt. This will allow the profitability to obviously improve. At EBITDA level, we have always maintained a historical EBITDA of almost of 13% for the last 10 years, and we expect to maintain at that level. The EBITDA of the company allows us, and the profitability allows us to report both ROC and ROE in excess of 20%. Even our cash to EBITDA conversion is north of 85%. Last couple of years, it has been north of 100%. But we expect to maintain cash flow to EBITDA conversion north of 85%, which allows us to reward the shareholders also going forward. So the margin profile of the company is expected to maintain around the 13 to 13.5% mark going forward as well at the EBITDA level.
Okay. And Mr. Tantia, right now in terms of your revenue breakup, roughly 93% comes from infrastructure and 7% comes from that concrete sleeper. But from what I understand, that this is only from railways. Are you exploring more opportunities when it comes to metros as well? Because, a lot of states and cities are developing their metros right now. So there's a lot of scope there.
So the infrastructure order book comprises about 55% from railways and also from NHAI, MORTH, etc. In terms of your question with respect to metro construction, we are already doing 2 contracts in Calcutta City for the Calcutta Metro. And we are exploring other opportunities in other states and cities like you correctly highlighted in terms of new metro construction as well. However, we are quite disciplined in terms of our bidding strategy. We intend to maintain the EBITDA level at 13%. We don't want to dilute that strategy.
Okay, Mr. Tantia, shifting focus to the international side, I want to understand what is the progress going on the Ghana factory and what is the revenue contribution that we expect for FY25 and in the next 2 to 3 years.
So the Ghana factory, the product has been now approved by the local authorities and the engineers. We are about to start the commercial production in the next couple of months. This financial year, we expect revenue from our Ghana subsidiary to be about 30-35 crores. And this will be, we have a 125 crore contract outstanding in Ghana, which is to be completed over 2.5 years. We expect to maintain that execution cycle as well in that geography as well. It is a promising country in terms of a new railway line construction, and we expect to get more orders in the future as well.
All right. When I'm looking at broadly your execution pipeline, you've got almost 4,000 crore worth of order book. Likely you'll exhaust that in the next 2 to 3 years. Is that the kind of clip that one can look at in terms of execution timelines?
Yes, broadly the order book is about 2.5 years, and we expect to exhaust this about. Currently, we have 3,700 crores plus this new L1 of 200 odd crores. So if you count that in, that's about 3,900 crores, which is to be exhausted over the next 2.5 years.
And Mr. Tantia, onto the way out forward, you were also exploring some EPC opportunities on the international side. Can you expand more on that?
So currently the EPC opportunity in India is quite large. There's a large national infrastructure pipeline, as most of you are aware. And the opportunity in India is such that there is enough and more business in India for the EPC companies. So we are exploring very judiciously opportunities in the Africa market for EPC business. We are not, it is a difficult business to do internationally. Therefore, we are mindful of getting our margins there as well. We will only step into those markets for the EPC sector as such if the margins are attractive.
And Mr. Tantia, with regard to borrowings, you've repaid a large chunk of your borrowing. Is there going to be a new set of borrowings that you're going to look at maybe in FY26? What's the kind of visibility on that number, on the liability number?
So like I said, the current borrowing is about 50 odd crores on the balance sheet. We also have some general corporate purpose money available with us. The cash flow from the operations is also quite strong. We don't expect to bump up that number significantly. We will have outstanding banking limits, which can be drawn as and when required, but we don't expect it to go up a huge lot. We are mindful of the interest cost and intend to keep that in check.
Okay, and I want to also understand what is the competition scenario like in terms of your order bidding, the kind of margins that we expect going forward. Can you expand more on the competition scenario?
Sure. So we generally see 5 to 6 bids in the contracts that we do bid for, which is largely bridges and structures that we do. This is a business which is more specialized in terms of EPC construction. And like I said earlier, we want to maintain our EBITDA margin at 13%. We have a hurdle rate of 13% for our internal calculation purposes. And we evaluate that every quarter as well for our ongoing contracts. And that's where the margin profile is expected to be going forward as well.
Okay, well, Mr. Tantia, thank you so much for giving us those insights on GPT Infra, and thank you so much for taking our time and speaking with us at NDTV Profit.